If you've ever walked away from a bank meeting totally confused and wondering why they'd only lend you so much when you earn good money, this video explains everything. And by the end, you'll understand the system better than most people who work inside it. There's a reason most people get borrowing capacity wrong, and it's because banks don't publish their full assessment methodology. They give you a borrowing calculator online that can be wildly optimistic at best, and brokers who just plug in the numbers without explaining the why aren't serving you. Here's what actually happens when a bank assesses your application. Let's start with income, because most people assume this is simple, but it's not. If you're a PAYG employee, the banks will usually take 100% of your base salary, but bonuses, commissions and overtime, typically only 50 to 80% is counted. And if you're self-employed, you'll usually need 2 years of tax returns, and the bank averages them, or even takes the lower year. Rental income, well, that's typically shaded to 80% of the actual rent because the banks allow for vacancies and costs. And if you're a casual employee or on a contract, policies vary wildly between the lenders. Some will accept 1 year of history, others want 2 years, while some will accept as little as 3 months. Now, for the expenses, and this is where a lot of people get a big surprise. Banks don't just take your word for it. They use what's called the HEM, or H-E-M, which is the Household Expenditure Measure. It's a benchmark based on your household size, postcode location, and overall income. If your declared expenses are lower than the HEM, the bank uses HEM, but if they're higher, they're going to use yours. And when you apply, some of the lenders will go through your bank statements, 3 to 6 months worth, looking at actual spending patterns, subscriptions, dining out, gambling transactions. They see all of it. Next is the debts, and this is often where capacity gets eroded fast. Your credit card, banks don't care what you spend, they assess the full limit as an ongoing liability. A $20,000 limit reduces your borrowing capacity by up to $100,000. Car loans, personal loans, HEX debt, all reduce what you can borrow. And then there's the 3% buffer. APRA, who's Australia's banking regulator, requires lenders to assess your ability to service a loan at 3% above the actual rate. So if you're borrowing at 6.5%, you're being tested at 9.5%. That's the buffer that protects the financial system, but it also means many borrowers can't access as much as they expect with certain lenders. Here's the part that nobody talks about. Every lender assesses all of this differently. Some are more generous with self-employed add-backs or only require 1 year tax returns or even financials. Some will accept a higher income percentage for overtime, allowances and even bonuses. Some will treat rental income at 90% instead of 80%, or they'll utilise investment interest tax deductibility. This is why applying to one lender and getting a no, or even getting a number you didn't expect, doesn't tell you what you can actually borrow across the market. There might be 3 or 4 lenders who will approve you at a significantly higher number. That's the value of someone who knows the matrix. So what do you do with all of this? First, understand your own picture before you apply anywhere. Second, don't apply speculatively. Every hard credit inquiry will hit your credit file. And third, work with someone who can match you to the right lender for your specific situation. That's what we do at Franzway. We assess your UMI, we look at your income type, your debts, your goals, and then we go to the lenders most likely to work for you, not the other way around. You now understand how borrowing capacity is calculated better than most people who have already bought property. That knowledge is your edge. If you want to apply that to your actual situation, book a free strategy call. The link is below, it's fast and it's free. We'll look at your numbers, tell you where you actually stand and build a plan from there. I'm Todd from Franzway. See you in the next one.